Okay, so question 1.1 in this activity, what I want you guys to focus on, it is on page 7, is you will see they've listed a whole list of differences that you could potentially find in while doing your bank reconciliation. So they've listed the differences on there. So the first one, they've given you an example. They said, okay, there's an outstanding check. That's the difference. Then you had to indicate whether it's adjusting, a timing difference, or an error. So when we discussed the bank reconciliation, we said the main adjustments or reconciling items you will find when doing your bank reconciliations is adjusting, a timing, or an error. Those are the 3 amendments you will have to make. So they said, okay, an outstanding check is a timing difference. Now, we said a timing difference is when it's been recorded in your cash book receipts, your cash book payments, but it hasn't actually gone through to your bank statement. So the bank hasn't shown the payment going through. So there's a timing difference between when the business recorded it and when the bank actually processed that transaction. Then they ask you for descriptions. Now you have to describe, okay, if we talk about an outstanding check, how would you actually explain it to someone? So they say a check is recorded on the cash book payments, but is not debited on the bank statement. So that is the difference. I've already recorded it in the business accounting records, but it's not showing onto the bank statement. And what's very important is they specify whether it's a debit or credit in your bank statement. Okay. Then the action required. So now they're saying, okay, what do you need to do when you do your bank reconciliation process? What action from the business point of view is required? So it says subtract the outstanding check on the reconciliation statement, so on your bank reconciliation. So why do I subtract it there? Because I've already recorded it in my cash book. So my general ledger balance already has taken that into account. But my bank balance is higher than what it would have been if that check has already gone through the bank statement. So that's why I'm taking it off, to decrease the bank statement's balance to get to the balance I have in my general ledger. Okay, so what I want you guys to do is I want you to go through the differences that they've listed on the left. Then I want you to indicate whether it's adjusting, a timing difference, or an error. And then focus on that column and the action required. And then if there's time left, you can do a description. If you do a description, you can just do it shorthand. You don't necessarily have to write it out. You can abbreviate in this. And then we will discuss it. Or we're going to play a little game based on your answers, and then you can select what you think it is. Okay, so step 1, step 2, and step 3 up to step 4 on page 4 to 6 will assist you guys with whether it's adjusting timing error, timing difference, or an error. If you're unsure, they've also given you a few examples there. And then it will also give you an indication potentially what you have to do with the action required. Okay, so I'm going to give you guys time to work through the question. I am online if you've got questions, so just type your question in the chat function and then I will respond to that. Okay, so let's say it's now 9:06. So I'm going to give you, okay, let's start with 10 minutes and then we go from there and we can discuss it. And if there's anything else that you guys need to know, then we'll go from there.